Tesla's latest news is not simply bullish or bearish. What we are seeing right now is Tesla entering a new execution phase where pricing power, autonomy, robotaxi operations, and energy expansion all matter at the same time. Hi everyone, welcome back to Life in the Future. Today, we are breaking down the latest Tesla updates from an investor's point of view. We have Model Y price increases, a rear-view camera recall, FSD testing in China, Robotaxi news, India strategy, and a possible Tesla energy expansion in Texas. But this is not just a news recap. The real question is, what do these updates tell us about Tesla's next phase? By the end of this video, you should understand which headlines matter, which ones are mostly noise, and what long-term TSLA investors should watch next. First, let's start with the Model Y price increase. Tesla raised prices on selected Model Y trims in the United States. Premium RWD and Premium AWD went up by $1,000. Performance AWD went up by $500, but the base model stayed the same. This is the key point. Tesla did not raise prices on every Model Y. To me, this looks like a careful test of pricing power. Tesla wants to keep the entry-level model attractive while testing whether higher-end buyers can accept higher prices. For investors, the question is simple. Can Tesla raise prices without hurting demand? If yes, margins could improve. If no, Tesla may have to reverse the price increase. Next is the rear-view camera recall. Tesla is facing a recall in the US and Canada related to a possible delay in the rear-view camera display. Of course, safety issues should not be ignored, but investors need to separate headline risk from actual business impact. Traditional recalls can be expensive because they often require physical repairs. Tesla recalls are often different because many can be fixed through software updates. So the word recall sounds negative, but the real question is the cost, the fix, and the impact on customer trust. For owners, the practical point is simple. Check whether your vehicle is affected and make sure your software is updated. Now, let's talk about FSD in China. Tesla has reportedly started hiring FSD test drivers in several major Chinese cities. This is important because China is one of Tesla's biggest markets, but also one of the most competitive. BYD and other local EV makers are moving very fast. If Tesla only competes on price, margins will stay under pressure. That is why FSD matters. FSD could become Tesla's software advantage in China, but we should not overhype this. This is not full FSD approval yet. It looks more like testing, preparation, and data collection. So the right approach is balanced. Do not ignore it, but do not treat it as a finished rollout either. Next is FSD 14.3.3. Actually, Smart Summon's top speed reportedly increased from 6 miles per hour to 8 miles per hour. This is not a huge stock moving update, but it still matters. Tesla's autonomy story is built through small improvements. Not every update changes the valuation, but every useful improvement tells us whether Tesla's software cycle is still moving forward. So I would not overhype this update, but I would see it as another small sign of continued software progress. Now let's move to Robotaxi. There are both positive and cautious signals. On the positive side, Tesla appears to be preparing maintenance and operational infrastructure for Robotaxi deployment. That matters because Robotaxi is not just software. It also needs fleet management, service locations, remote support, safety systems, and regulatory reporting. This is the boring part, but it is very important. On the cautious side, Tesla reportedly disclosed 2 low-speed collision incidents in Austin to NHTSA. Reports suggest there were no passengers inside, and the vehicles were under remote operation. This does not mean Robotaxi is failing, but it does remind us that Robotaxi will be judged by real-world safety and public trust. For investors, this is the key point. Robotaxi has huge upside, but Tesla now needs to prove execution, not just potential. Next, India. Tesla has reportedly moved away from plans to build an EV factory in India and is shifting toward a retail-focused approach. At first, this sounds negative. India is a huge long-term market, but building a large factory before demand is proven could be risky. Tesla has many capital-heavy priorities right now: AI, autonomy, robotaxi, energy, and factories. So this may not be Tesla giving up on India. It may simply be Tesla saying, not yet. For long-term investors, this could be seen as capital discipline. Now let's talk about Tesla Energy. Reports suggest Tesla may be building a large solar panel manufacturing facility near Houston, Texas, possibly connected to a Megapack-related site. This is one of the most interesting stories today. The car business is affected by interest rates, price competition, and consumer demand. Energy is connected to long-term trends like grid storage, renewable power, AI data center electricity demand, and energy infrastructure. Robotaxi and FSD usually get more attention, but energy could become one of Tesla's more stable long-term growth engines. So, investors should keep watching Megapack growth, energy margins, and production capacity. Now let's connect everything to the stock. Tesla is trading around the $400 level, which is an important psychological line. But today's news should not be judged from one headline. There are positive signals: Model Y price increases, China FSD testing, software progress, robotaxi infrastructure, and possible energy expansion. But there are also risks: a recall, robotaxi incident reports, India uncertainty, and execution challenges. So the market is asking one big question: is Tesla still a high-growth AI, autonomy, and energy company? Or is the near-term EV business still too uncertain? That is why every headline matters right now. So here is my conclusion. Today's Tesla news shows three things. First, Tesla is testing pricing power. Second, FSD and robotaxi are moving from vision to real-world execution. Third, Tesla Energy may be quietly becoming more important. This is not purely bullish and it is not purely bearish. Tesla is entering a phase where execution matters more than storytelling. For long-term investors, the question is not whether every headline is positive. The real question is whether Tesla is still building the foundation for future growth. Can Tesla protect margins? Can FSD expand internationally? Can robotaxi operate safely? Can energy become a larger business pillar? That is the framework I would use. Short-term headlines will move the stock, but long-term value will come from execution. If you found this analysis helpful, please hit the like button and subscribe to Life in the Future. I cover Tesla, AI, autonomy, energy, and the future of investing every day. Thanks for watching, and let's keep looking at Tesla not just as a stock, but as a company shaping the future. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.